Fed yesterday, quarter point hike, as expected. We all thought that was going to happen. What did you think about Jay Powell saying that the Fed remains data dependent and also saying he doesn't see another hike until a year from now? That will put us in July of 2024. How do you see that impacting the markets?
Yeah, so look, I think that Jay Powell is starting to figure this messaging thing out. It was a really balanced message on the whole, as expected, and I think that they are data dependent. I take him at his word. And he's not showing his cards. I don't frankly know. I'm not convinced that he knows what his cards are yet. And so he's going to wait and see how this data plays out. Whether there's another hike in September or November, I think remains to be seen. We're focused on when they actually start cutting rates, and we don't think it's going to be for some time.
All right, so you're interested in when they eventually cut. I want to bounce something off you. We have some new research from Morgan Stanley overnight, all but ruling out a recession. And the note goes on to say, in part, we continue to see a soft landing for the economy this year. With inflation and wages slowly easing, as well as job gains, we continue to look for the Fed to hold at the peak rate of 5.375 for an extended period before making the first 25 basis point cut in March of 2024. Surprised by that take from Morgan Stanley? Is it even possible after what Jay Powell said yesterday?
I think that's fairly in line with our view, actually. I think that makes sense, that we're not expecting the first rate hike until, or excuse me, the first rate cut until sometime in early 24.
But he said a year from now. That's the second half of 24.
So yeah, I would say that we're expecting it the first half of 24. We're not going to see multiple rate cuts. What I think was notable from what Jay Powell said yesterday was that he said policy rates are now restrictive, but they haven't been restrictive enough for long enough, meaning that they might cut a little bit, but what the bond market is currently pricing in, 5 cuts of 25 basis points between now and the end of 2024, that's just hard to see. And that certainly doesn't match up with what the equity market is telling us.
All right, give us a sense what you think about the markets, especially for this day ahead. I'm looking at the NASDAQ futures up over 1% right now. A lot of people thought this rally was at least partly fueled by the idea that this would be the last hike. Clearly, that's not the case. The door is open, as we've been saying all morning long. Do you believe that technology can continue to run simply, it seems like, on AI enthusiasm?
I think it can, at least over the short term. You know, our longer term view over the next several months is more cautious. We are slightly underweight equities. But I think over the short run, I think there's enough in the data to support this notion that the Fed may have actually engineered a softer or no landing scenario. We do believe there is a lag to this policy tightening. And so we're not going to actually see that show up in the data for several months to come. That's why we want to still, why it still doesn't really pay for us to be ultra bullish at this time.